In this video, the Bitcoin price is currently forming this very interesting diamond pattern. I'm gonna take a look at what this means for the Bitcoin price. This pattern is called a diamond top, and it is basically a reversal pattern. I'm gonna show you exactly the targets, and I'm gonna show you exactly what we should expect, because this pattern is most likely going to break out today. And the big news for today, Jerome Powell was featured in 60 Minutes, and in this interview, he gives us proof that hyperinflation is coming. I'm gonna show you a few clips from this interview, and you will find this mind-blowing for sure. And if you think that that sounds interesting, then I think that you should definitely watch this video. Hello guys, and welcome to the moon. My name is Carl, and I'm going to bring you this Bitcoin video. Alright, so we do have a pattern here that resembles something that is called a diamond top pattern, and if it's at the bottom, it's a diamond bottom pattern. And of course, the first thing that you need to take a look at when you find one of these is this diamond shape where Bitcoin is, or the asset is bouncing between support and resistance, forming this diamond shape. And also something from my experience that seems to be a key proponent is this middle candle. Very often in a diamond pattern, I see this big candle. It could be to the upside and it could be to the downside, but we usually see a huge volatile move that basically goes from the top down to the bottom, and sometimes from the bottom up to the top. So basically a big move in the middle of the pattern. That is something that I've seen many times, and this is what we see in this pattern, which gives me reason to believe that this might indeed be a diamond pattern. And every time I talk about diamond pattern, there are always some comments talking about how ridiculous it is that I'm drawing these lines showing us a diamond pattern. But if you go over to maybe the most respected guy in chart patterns, Mr. Bulkowski, this site is the patternsites.com, maybe the most respected source for chart patterns. And here you have this Bulkowski's diamond top, and if I'm not entirely mistaken, I even think that he is the one who discovered this diamond pattern. But regardless, here we can see the diamond top, a move into the pattern, then we see this diamond formation, and then we move down from the pattern. Alright, so let's take a look at some of these characteristics. First of all, the price trend should be upward leading into the pattern. And looking at the pattern, we can see here that we had a upwards trend leading into the pattern, so that checks out. And then it's supposed to look like a diamond, but one usually tilted to this side. And this is something that we see also, of course. We have a diamond, but it's a little bit tilted to one side here. And we need the price to touch each trend line once or twice. But don't worry if your lines cross some of the price outliers. So basically, we can see that we have some outliers here. I'm pretty sure this is what he means, that it doesn't have to be perfect. And then we have a volume trend downward 59% of the time. Our volume trend is actually upwards in the first part of the pattern and then downwards in the later part of the pattern. But I think this is not a big problem. And then we have breakout downward 57% of the time. What does this mean? Well, this basically just means that we will break down 57% of the time, and we will break up 43% of the time. So slightly bearish. That is what we know from this pattern. How about the target? How can we calculate the target? Well, let's just consult Mr. Bulkowski once again here, and basically you can read all of this if you want to, but very simply, if we go back to the chart, what we should do here is, if this breaks to the upside, then we should expect a target to be calculated something like this, and Bitcoin should come up all the way up to $11,000 approximately. If Bitcoin breaks down, then we should come down back to where the pattern started, down there. And this gives us a target of $7,760 if we break down. And as you can see here, we're getting closer and closer and closer to the apex of this diamond, which means that Bitcoin needs to have a breakout before the 20th of May. This gives us 2 days basically, but I think we're probably going to see a big breakout today, because usually we don't see a breakout at the end of the apex. We usually see it slightly before. So a breakout today is very, very likely. And like I said, there's a slight bearish bias, but very, very slight. I think we could almost just call this a 50-50 chance, and that's why I want to consult you guys. What do you think is going to happen? Please vote in this poll right now. Will this pattern break up, or will this pattern break down? And next up, the average cost to send 1 Bitcoin is now up to $3.75. This is still a lot cheaper than a bank transfer, according to Maddie Greenspan here. We can see that, yes, this average transaction cost has been going up. And some people will say that this is a big problem because this means you can't buy a cup of coffee with Bitcoin. But personally, I don't think this is a problem, because I don't think that Bitcoin was meant for buying a cup of coffee. I think Bitcoin is meant as a final settlement layer, and there will be second layers on top of Bitcoin, even third layers on top of Bitcoin, like Lightning Network and any other type of second layer solution. And on these layers, that's where all of these small transactions will be made, where we can get almost zero fees and almost instant transactions. And this means that we can get these very, very quick transactions very, very cheaply, with much more security than the altcoins that can provide similar performance. So when you use an altcoin that is extremely quick and extremely cheap, then basically they have been sacrificing security to give room for convenience. But with Bitcoin, you can get full security if you use on-chain. If you use second layer solutions, you will get slightly less security, that's true, but still much more secure than all of these altcoins. And next up, this is the big story for today. Jerome Powell, the Federal Reserve Chairman, was featured in 60 Minutes, and he was talking about their monetary policies. What he said was very, very interesting, because usually the Federal Reserve and the Federal Reserve Chairman is using these very, very complicated words like quantitative easing and fiscal policy, and it just sounds very complicated and complex, and essentially it's just a way to hide the truth that they are printing currency out of nothing. But this time he actually puts it very, very plainly right in your face. So let's take a look at this, listen to what he says about their current monetary policies.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
This is actually the first time I've heard a central banker admit that they are printing money out of nothing without using the word quantitative easing or any other complex words. He's actually putting it very, very simply, and he's talking about this digital creation of money, and this is expanding the money supply. And of course, this begs the question, where does this end? Well, let's take a listen to what he says about that in this clip.
Has the Fed done all it can do?
Well, there's a lot more we can do. We're not out of ammunition by a long shot. No, there's really no limit to what we can do with these lending programs that we have.
And it does not take a genius to understand that this will lead to hyperinflation. I mean, he is admitting right in our face here that they have no limits to what they can do. They can expand the currency supply into infinity. But when we have seen countries do this before, like the Weimar Republic, Venezuela, Zimbabwe, and a dozen of other countries, this leads to hyperinflation eventually, and this of course leads to the collapse of the currency that is hyperinflated. So it will probably not take long before we see the dollar come under a huge amount of pressure from this currency expansion, and eventually we will see a global hyperinflation because the dollar is actually backing up all of the other fiat currencies around the world. So if you hyperinflate the dollar, then you're essentially hyperinflating the whole world, because the dollar is the foundation of the world economy today. It's the world reserve currency. And this is a key point for Bitcoin, because Bitcoin, if it was used as a world reserve currency, then at least you couldn't inflate the world reserve currency. You could inflate all the other layers on top of Bitcoin, but Bitcoin itself can never ever be manipulated. And that's a key point about Bitcoin, and that's why I believe that Bitcoin should be our world reserve currency in the future. And there has also been a lot of speculation about negative interest rates. We've seen that in countries around the world, like Sweden, I think Switzerland, Denmark, Japan. We've seen negative interest rates. And the big question is, will the US also have negative interest rates? And Jerome Powell says the following about negative interest rates.
In the early days of the crisis in this boardroom, you and the committee lowered interest rates essentially to zero. Would you lower them further into negative territory, which the president has suggested is a good idea?
Around this table during the last crisis and during the recovery, we looked at negative interest rates, and it's something we decided not to do. We used other tools instead, and those tools involved forward guidance about the federal funds rate and also lots of asset purchases, or quantitative easing as it's often referred to. I continue to think, and my colleagues on the Federal Open Market Committee continue to think, that negative interest rates is probably not an appropriate or useful policy for us here in the United States.
And why not? The president seems to think it would help.
The evidence on whether it helps is quite mixed. The issue is people would be depositing money in the bank, and that money would be shrinking. They'd be paying interest to put their money in the bank. So it's not a particularly popular policy, as you can imagine. But in addition, it can also tend to depress the profitability of banks, which makes them likely to lend less, which weighs on economic growth. So I would just say it's not at all settled in in economic analysis that negative rates really add much value.
I think the idea of negative interest rates is something that a lot of people have a difficult time getting their head around. Would you explain it to me?
Well, rather than being paid interest on your cash, you pay interest to the bank. If you borrow money, they pay you to borrow money, and if you lend them money by putting it in a bank, then they pay you money.
So the banks would pay people to borrow money, essentially.
Yes.
And that would conceivably cause more business and commerce to happen.
It would, but this has been tried. We have negative policy rates in many countries around the world as a result of the financial crisis, and there's no clear finding that it actually does support economic activity on net, and it introduces distortions into the financial system, which I think offset that. So, there are plenty of people who think negative interest rates are a good policy, but we don't really think so at the Federal Reserve, and I think it's an area of real uncertainty in the central banking world.
So this means that we will probably not see negative interest rates in the near future. However, this could change, because if there is anything that we know from bankers and politicians, is that they can never hold what they are promising. So if they say that they will not do something today, then next week they are just going to go ahead and do it, and then they will say that something changed and they had to revise their plan or whatever. I think we will see negative interest rates globally in the next few maybe months, or at least in the next couple of years, as we see this financial crisis escalate and get much more deeper. Eventually, people will react to the massive currency printing, and they will need to take these other tools into consideration. So basically, a central banker only have two tools. They can print money and they can manipulate interest rates. And currently, the Fed is doing a lot of currency printing, the next step would be to lower interest rates. So yeah, let's see what happens in the future, but I guess this is at least evidence that we will not see negative interest rates in the near future. And guys, if you believe that hyperinflation is coming to the US dollar, please leave a thumbs up down below. And if you haven't seen this video, then click right there right now, and I'll see you guys tomorrow.